All right. Good morning, everybody. It is 6:30. My name is Scott Redler. I am the Chief Strategic Officer of T3Live.com. This is the 6:30 Club, where I go over the narratives of the market, what people are ranting about, where we can make some money for the day, hopefully set ourselves up to win for the week. I love Mondays. Everyone's like, it's Monday. I'm like, come on, let's go grab it, right? You got so many days in front of you, so many things to prepare for, so many situations to role play in your head to figure out which way it's going to go. But the only way you're ever going to execute with confidence is if you're prepared at your desk. Anyway, hopefully everyone had a good weekend. Happy Diwali. Got a lot of Indian friends, and they're having fun all over my block. And a lot of fireworks going off. So if you celebrated, congratulations. Hopefully you had a good time. And here we are, getting ready for another week. We've had a 2-week rally. A lot of people are like, oh my God, Red Dog, how could this happen? Mike Wilson said there's going to be no more fourth quarter rally. This person said we're going into a recession. Why is equities going up? Well, softer bad news has been good news for the equities. It means that the Fed is, pretty much done. And now the question is just how soft do we get, and whether the market will care at some point for bad news to become bad news. And right now it's not. Inflation peaked about 6 months ago. A few weeks ago, rates peaked, and now here we are where mega cap tech has been doing a lot of heavy lifting. You have some mid caps doing some, decent, moves, and we're just trying to participate. I know a lot of people got a little beat up on Thursday into Friday. If you thought Thursday was the end of this, this rally, all of a sudden Friday they ripped the teeth out of some shorts. You had about an hour, that's not an hour, but an hour to figure out how you wanted to switch gears to participate or at least cover some shorts because it was powerful. So anyway, here's a chart of the S&P cash. You take a look here, this candle definitely looked as if, you had an upper flag that was going to break to the downside, and then boom, look how they just engulfed that. Okay, that's that's not easy action if you went out net short. If you put on a hedge there because you had too many positions, that's another story. But anyway, this was a big move, pretty surprising to me also. But again, it is what it is. You have this gap that held, it showed power. This gap held, showing power. When gaps don't get filled, that just shows that that direction has power. And then pretty much halfway through this bar, once you go 50% through a prior candle, it negates any meaning of that candle. So for now, what we do, we hit a high of 44.18. We'll see, does this 42.90, 43.92, 43.93 hold, on this little, futures down 8-9 handles. Go to the weekly chart. I showed you guys the weekly cup and handle pattern. By the way, on the weekends or usually on Fridays, I like to give you guys a snapshot of what the more intermediate macro landscape looks like, and I show you. I'm the Chief Strategic Officer of T3 Live, but I'm also Scott Redler. I'm both of them. I have 3 different accounts: an active account, a swing account, a box account, and options account. Actually, 4 accounts that I get paid on quarterly. But then, as a founder of T3, as well as someone who puts together a note and 40 charts, I'm also on the payroll. So if you're on the payroll somewhere, whether you work for a major software company, if you're a lawyer, a doctor, a fireman, a policeman, I always try and show you how, besides trying to make some cash flow, you got to set yourself up for the long term. How do you do that? You do that with a 401k. Max it out, especially if your employer matches it, because that's free money and it compounds over time. So I've been doing it every single month. I'm 51 years old. I think you could do it longer, but you have to do it to you're 59 and a half. You can't take it without penalty. So that's one thing. Then 403b, that's if you're in a private business. It's the same kind of thing as a 401k, but it's private. You put monthly flows in. And then 529, right? College costs are through the damn roof. Trying to forgive loans and whatnot. That's not going to bring down university costs. But anyway, 529 plan. I started when my son was 5 instead of when it was 1, which I've played some catch up. During both of these moves, I actually threw in an extra 10 spot, to play some catch up, figuring that if I could throw 10 grand extra in here, chances are the S&Ps can go to highs. I did the same thing here, and I up my payment from 500 to 1,000, and I'm still probably don't have enough for college, but it's fine. You know, he's gonna get a scholarship. He's gonna be 6'4" and play basketball. No, I'm kidding. So I'm trying to prepare for that. The market could do that, and then you know, then the blood in the street account. Okay, so the blood in the street account is the account that some of you guys use to also put flows into your own Roth IRA or your own long-term account. And you know, the last, you know, we did it. I did it twice in there. I did it during here, which we went over. Guys made good money. Did it. I did it this one, and then recently I didn't wait too. I think my first buy was at 4,300 with her, and then I did have a buy somewhere around 42.12, and I actually snuck one in near 4,100, but we didn't talk about that. So PS at 44.18, the two tiers that I went over and documented with you guys are in profits, and I'm not selling them. You know, chances are, you know, maybe next year, you know, when we're back above 4,600 or 48.18, you know, then I'll take it off and then I'll put it back in a rider, and then I'll let it sit there for another rainy day when the S&P falls more than 10% off highs, and I put that to work. So anyway, going to this week, let's go back because we need to figure out how we're going to make money this week. You know, the SPYs. Here's a chart. We'll see how it goes today. As of right now, the SPYs are down 90 cents. If you know, I think it was Moody's after the close came out and warned the U.S. get your fiscal, you know, house in order, because meanwhile they spend so much damn money, it's crazy. So they did say, hey, you know what, you guys might lose your AAA rating if you guys don't get a real deal together, this and that. So that caused a little bit of aftermarket selling, but you know what, we had such a big move that all we're doing is pulling back a little bit. Like if you look here, SPYs are down a whole 90 cents. That's not a lot. I would think if you know they want to keep this candlestick in control for the rest of this week, then we hold this 438.47, which you know it's not even at 439.75 yet. If you go to here where we ramped, you know, basically we ramped into the end of the day. Actually, let's go. That's Meta. Let's not do Meta. Let's do the SPYs because that's what we're looking at. Meanwhile, that ramped also. So really, you know, all it took back is from where we were at 120. So not like it's we're down a whole hell of a lot. So this would be one little level of support if we hold that. You know, very you know, that'd be very, what's the word? Impressive. Meaning pulls are buying dips so, you know, so close. And this is the area that you would think could hold today. And if we digest, I'm hoping we don't run away, to be honest. I'd like to rebuild a few little patterns here, but that's 438.47. The Qs, wow, and Fuego. Qs have been showing relative strength. The Qs have been where the leadership is. The Qs have been absolutely, you know, just powerful. You know, on Friday, everyone's like, Red Dog, my goodness, Thursday was a down day. You know, what should I do today? I'm like, well, watch Microsoft. If they can't sell down Microsoft and Microsoft takes back Thursday and all of a sudden gets above the recent high area, mega cap's going to explode. So anyway, here this at 378.50. It seems like this 387, it's just a matter of time. But anyway, we'll see how that goes. But Microsoft led the way. Look at that move in Microsoft. My goodness gracious. Microsoft rallied hard in the first 30 minutes to show that yesterday meant nothing. That was the language we did at like 10 o'clock on Friday. So PS, here you are, you know, at a new all-time high. So bottom line is if Microsoft could not only just make a weekly or monthly high, could make an all-time high, chances are people are going to think about what other mega cap tech stocks could work their way back to all-time highs, or where are the good setups. So anyway, first of all, Microsoft should be something that you continue to trade. We did really well in here. Unfortunately, I sold mine somewhere around here. I'm like, you know what? I've been in it for 5 days. What a great trade. For me, cash flow-wise, I took it. But anyway, hit a high of this, which is what, 370.10. Might as well write that in since we're doing our work together. This has been a leading indicator. This has been the measure of risk. Remember, you know, it would that during the May rally, it was different stocks. It was you had Nvidia making highs. Actually, Tesla was strong. The Tesla's been a laggard now. But so someone's like, Red Dog, you know, what can we stay with to follow? I'm still in Meta. Meta to me has a really nice channel. Okay, we've been in it pretty much since right in here. It does seem like it's just a matter of time for it to clear this 330.50. Meta's been pretty much in the same channel since July. So that's a nice multi-month channel that I would think the market wants to hang this week. And if the CPI is good, I would think Meta is going to be something that, you know, continues to, make a new move to weekly and monthly highs. So keep that on the calendar, or keep it as a setup. I'm just going to try and stay along, buy some dips. It's down $1 today, so we'll see what happens here. I'd like to see, it'd be nice if 326 holds. Right now it's 327.50. It based all afternoon on Friday, so it'd be nice and easy if it could continue to hold this 326-ish, and you could buy it, and then maybe goes green a little bit later in the day, and you make some good money, and then it takes out 331 later this week, or sooner than later, whenever it is. So Meta's still set up. Then you have all those pro earnings gaps. But before we get that, Amazon seems like it also, it's been obviously since the gap and go pro earnings gap, it's been above the 8-day moving average. Remember how many ebooks I wrote about the 8-day moving average? You try and be long something above it, not short it. Well, anyway, it's had a big move. You have a bull type flag here. This is the prior high. So this doesn't look super extended and looks like it's got leadership capabilities to make a higher high. So the question of my thought this week is, Microsoft was able to make a new all-time high, monthly high. What stocks can we try and, besides staying with the leaders, stay with that you could hold, that they don't shake around too much, that could get there also with the swing type trade using a tier system. So I do think Amazon and Meta are two of them that potentially could happen. Last week, one of my best trades was Apple, and Apple was not in that category. Apple was a laggard. It was out of play, had earnings. I'm like, I love to be in Apple when it's calculated, and Apple wound up giving a really great trade, right? We bought Apple here. This was a breaking of the descending trend line trade, and I'm still in a call spread that's maxed out. But now it's hard because there's no real setup here. This was your setup. This was your spot to sink your teeth into it and then manage it. And now it's like, okay, what do we do here? Well, you know what? Apple is down 80 cents, 88 cents. So maybe Apple goes red to green today. If you feel like buying a dip, it's not really set up. But I might look at it to buy a dip to re-engage it. It's just a little extended, and I'm not going to be in a rush there. Netflix was awesome too. Netflix, gave you your pro earnings gap right here. Remember this? I'm still in actually a power play with that with my community. This was a buy, and they've been massaging it all the way up. Looks like this gap will get filled. So a lot of still constructive patterns that are moving along. Then like in mid-tier land, I'm long Datadog. Datadog had a big earnings gap, held in there. Doesn't this look like a big, pro gap bull flag? So I'm long it, and I might buy more. Yeah, I might buy more. I love to buy high and sell higher when that works, and that might work here. So that's 104.43. So that's something to watch. Somebody said, Red Dog, look at MDB. I haven't looked at it. Looks pretty good too. You had an earnings gap here or whatever that was. Now it's flagging. So remember over the weekend I post a lot of chart patterns. I'm saying know your candlesticks, know your chart patterns. Well, if you look and if you Google bull flag, here's your pole, here's your flag, and maybe it gets above and stays above for more action, right? And actually overall, if you look at this big gap, this held. Now you're going all the way back from May, so that could be something. Palantir also very nice, big pro gap when consolidated, made a bull flag, got above 1917, and now we'll see kind of get above 20 and a quarter. I am still long that, and I bought some options the other day, looking decent. Square isn't looking as great, but it's hanging around. It's above this pro gap. It's just the small caps have been pretty gross, to be honest. We had a move in the small caps, and then they kind of just blah. And I think I saw a stat. We had the biggest, wide margin from mega cap tech to the small caps. So anyway, we'll see if small caps can get going. The IWM is hanging by, like, you want to talk about a thread. This is not even a thread. But anyway, if this is going to be at all relevant at all, then Friday's low. It did do a little Red Dog reversal on Friday. Some people are like, hey, Red Dog, did this do a Red Dog reversal? I'm like, well, it did. It did go below a prior low, came back above it. So if you made money there Friday, great. But hard to get too excited. If it pops right back into here fast, hey, maybe it's just taking its time. It's building this right shoulder, and it could see a little bit of a move into year end. But hard to trust these small caps because they've been such a disaster. And then you have a Biden meeting with Xi on Wednesday. I made some decent money in the FXI. I did go along the FXI just thinking FXI and the IWM like the same. They've been just horrible. Maybe you've had some plays there. But I would think at some point, if our rally is going to extend a little bit more in the S&P in the next few weeks, you would think that China does something to get whatever it is going, because this is really near the the lows of this entire channel here. So maybe there's a little anticipation ahead of Wednesday, and then maybe a little emotion. I don't know. All I know is you can trade versus area. It's not a barn burner. It's just kind of a concept. I bought some options for the Friday. For FXI for the Friday after Thanksgiving. It's thinking that, hey, maybe the 24th, you have 2 weeks for China to play some catch up, especially if the S&P hangs in there. So it's just a concept play. You have leaders, you have laggards, you have bull flags, you have pro winners gaps, you have sectors, whatever. Some ones like, oh, do I care about gold? I really don't care about gold. I'd rather you focus on Bitcoin, which had a really nice move. A lot of people made really good money with Bitcoin this year. I did pretty well with Bitcoin also. I did say that, it's kind of like if you have that pie graph or whatever you do with your family office. If you, where's Bitcoin on here? Where did it go? This is, I know something got disconnected here. Anyway, my watch list, there it is. Look at this move. Sometimes TrendSpider gets a little funky. But there it is. What a move, right? We talk about technicals actively, and then you talk about long term. And if you've been buying Bitcoin every single month, like we spoke about the past few years, and you have 10% or 15% of your overall financial health in it, it's going to do something for you down the road. If you trade it actively, triggered above 28 right here, bull flag continuation all the way up. Look, it's been above the 8-day this entire time. That's why you want to be in something that's above the 8-day and the 21-day, because there's momentum and strength, and you could ride it actively and get paid. A bunch of other times it wasn't, right? You can go all the way back, to last year. It wasn't the place to be. But anyway, nice move. If you go to the weekly chart, which I've shown you a bunch of times, the weekly chart is coming into my 37 to 39 area. Like watch here. Here it broke the 8-day and it was a disaster ever since. Right around here, it got back above it, and what a nice trend since. Would I be buying it up here actively? Probably not. But this would be where it broke down from. So that's why I put it out there that maybe 37 to 39 is your spot for this year. And if you made some good money there, congratulations. The equity type of stocks that correlate, like a Riot or a Coin or a Mara, they haven't been great. They've given you some trades, and that's not been where you can make your money usually. Anyway, or recently, sometimes they give you a trade, but it's been hard. Now, if you wanted to look at gold real quickly, if you're a boomer, not only boomers, but I'm just saying, it lost momentum right there. It had a big move also, from 168 to 186, and then broke the 8-day. Now it's coming in. I guess we'll see if it holds this spot. But actively, if you trade, get paid monthly and quarterly, it changed right there. Anyway, it's 6:49. We'll see how it goes. Once again, here's your spies. A little tricky at the end of the week. I know a lot of people put on a lot of hedges on Thursday. Some people got super duper net short, the ones that listen to the economists out there and all the bears out there and all the naysayers out there. And if you did that on this candle, I understand. Okay, I was a little overhedged here too, but then I had to switch some gears. So now we'll see, does 438.50-ish hold? That would, hold the top end of this candle, keep some momentum, and then we'll see what happens with the CPI, because the market likes, inflation lower, the market likes rates lower, the market likes, weaker than expected news for now. But if it gets too weak and too soft, then all of a sudden the super, recession talk will happen, and then maybe the market switches gears and starts to worry about that. But for right now, it's not. Anyway, thanks for tuning in. I appreciate all you guys. Listen, some of you guys are like, Red Dog, you're crazy. It's ice cold outside. How do you go in the ice barrel? I'm like, I love it. Today, this finger felt like it was going to fall off. This pinky I couldn't feel for like 4 minutes. My orange toe was throbbing for about 20 minutes, and now everything feels great. You do what you got to do to get your mind right. I go in the sauna for 30 minutes. I sweat it out. Jump in the ice barrel for 3 minutes. I think about the day, and then boom, here we are, ending the 630 Club, and now I'm going to do 30 charts. You got to do what you got to do to keep your mind right, keep you moving forward, keep you in a good mood. Listen to some music in the morning. Don't listen to the networks. It might even help. Later, guys.